we are now going to start looking at employees tax. So employees tax, provisional tax, both on the fourth schedule. So employees tax is calculated by employers on the remuneration that they pay you. So understand this now. Let's say you are working for two people. So for 4 hours a day, you're working for X Limited, and for another 4 hours a day, you were working for A Limited. Each of them pays you a salary. X Limited pays you a salary of 5,000 rands a month. A Limited pays you a salary of 10,000 rands a month. Both of these employers will calculate employees tax. But now understand, X Limited can only calculate employees tax on whatever X Limited pays you. A Limited can only calculate employees tax on whatever A Limited pays you. So in other words, you will have this person will have two separate employees tax calculations that will be performed each month, and each of these employers will do their own calculation. That's very important for you to understand. So the amount that you receive in your bank account, let's say the tax on this is 2,000 rands. The amount that this person will receive in their bank account each month is 8,000 rands from A Limited. And X Limited, maybe the tax is 500 rands, so 4.5. So that is what they will receive. So you receive the amount in your bank account less the tax that have been withheld. So as I mentioned previously and before, it is important for you to make the mind shift when you're looking at employees tax, and to remember that you are doing the calculation that the employer is going to be performing. So each employer can only calculate employees tax on the remuneration paid by that specific employer. So who pays employees tax? In other words, who is liable to pay employees tax? Very important, guys. It is an employer who pays remuneration to an employee. And obviously it has to be South African. That employees tax must be paid across to SARS, the commissioner, within 7 days after the end of the month during which it was held. So if you have a 30 June, for the month that ends 30 June, this employee might have been paid on the 25th of June. That's when most people get paid, on the 25th of each month. The month end is the 30th of June. You need to pay it 7 days after the month end, not after the date that you've paid it, after the month end. So that would be 7 July. If you haven't paid it by then, there will be penalties payable by the employer of 10% of the amount. So, guys, very important. When do you calculate employees tax? When there is an employer and remuneration and employee. Now, very important, you will see that the definition of remuneration is the most important, because an employer is a person who pays remuneration. An employee is a person who receives remuneration. So remuneration is the most important principle. So let's look at the definition of remuneration. So remuneration is, in simple terms, the amounts that you receive from your employer. That's the most common one. So your salary, overtime, wages, bonuses, travel allowances, fringe benefits, severance benefits, those type of things are all considered to be remuneration. But let's go through the definition and make sure. So remuneration means any amount of income which is paid or payable to any person by way of any salary, leave pay, wage, overtime pay, bonus, gratuity, commission, fee, emolument pension, superannuation allowance, retiring allowance or stipend, whether in cash or otherwise, and whether or not in respect of services rendered. Right, so it doesn't even have to be for services rendered, but if it's an amount that you receive. Right, including, then they say, any amount. So before I actually continue there, let's just look up to there. Now, what's important for you to see there is that these are the things that you see from your employer: salaries, leave, overtime, and so on. So now we're going to look at some of the other amounts, and some of them have special rules. Okay, so the first thing I want you to see is they say it also, now we're looking at amounts which are included. So it includes amounts which are referred to in the definition of gross income in section 1. A is an important one I want you to see. A in the gross income definition is an annuity. Now remember, what is an annuity? It is an annual amount. The annual amount means it can be paid every day for a year, once a week, once a month, once a year, doesn't matter, but you determine it in terms of an annual. So what is the amount that you're going to receive per year? 500,000. Okay. We're not looking, so that's the amount. It is repetitive. So it's not just a once-off payment. And there is an obligation to pay. I was going to say by someone. So someone owes it. So what does it mean? So for example, if I say to you, listen, I like you, I'm going to give you 5,000 rands a month for as long as I like you. Yes, it's an annual amount, 5,000 times 12, 60,000 rands. It's repetitive because it happens over and over, but I have no obligation to pay you. It's not an annuity. But if you belong to a pension fund, for example, or belonged to a pension fund, and they pay you an amount, so all of your years that so remember how it now works, so pension and provident fund, all of the years that you work, you contribute to this pension fund, provident fund. The people at the fund take your money, they invest it in shares and in properties and portfolios and all sorts of things, and that generates income, or returns, let's call it returns rather, dividends, interest, capital gains even. Those amounts all then goes into your account, or your share of the pension fund or provident fund. So when you then one day stop working, your pension or your provident fund will pay out that annuity. Okay, they'll say if it's a pension fund, for example, 80% of your final salary will pay for the rest of your life, adjusted by inflation. Now, that is an annual amount, it's repetitive, and someone has the obligation to pay you. That's an annuity. So what am I saying here? Very important. If a pension fund or a provident fund or retirement annuity fund pays you an annuity, that is considered remuneration. No, it's not from an employer, but it is included in this definition. C is for services rendered. Okay, so that's the paragraph that says for services rendered. CA and CB all have to do with restraint of trades, and the rest of these have to do with lump sums or from retirement. Okay, then, any amount required to be included in such person's gross income under paragraph I of the gross income definition, and that is the fringe benefit section. So they say in terms of paragraph 7. But just quickly see here, excluding the amount described in paragraph 7 of the 7th schedule. Okay, so this means fringe benefits. So fringe benefits are included, but they say here, but excluding paragraph 7 of the 7th schedule. That's a company car. Okay, company cars are included in remuneration. There's just a special rule, so they're just excluding it from this discussion over here, which you'll see it a little bit further down. Right? Then they say it also includes any allowance or advance which must be included in the taxable income of that person in terms of section 8.1a. Right, so any allowance that you received. But then they say other than, so it means excluding, other than means excluding, an allowance in respect of which paragraph C or CA applies, alright, that's fine for now. An allowance or an advance paid or granted to that person in respect of accommodation, meals, or other incidental costs, while that person is, by reason of the duties of his or her office, obliged to spend at least one night away from his usual place of residence in the Republic. Okay, so up to there. So we're saying it excludes, in this case, a subsistence allowance. Okay, so subsistence allowances are not included. But then we have a rule, provided that where such an allowance, so that's now the subsistence allowance, was paid or granted to a person during any month in respect of a night away from his or her usual place of residence, and that person has not, by the last day of the following month, either spent the night away from his or her usual place of residence or refunded that allowance, then that allowance is deemed not to have been paid or granted during that first mentioned month in respect of accommodation, meals, or other incidental costs, but it is deemed to be an amount which has become payable to that person in that following month in respect of services rendered by that person. Okay, so what are they saying? They're saying subsistence allowances are excluded from remuneration. So there's no employee's tax on it. It's not remuneration. But if you receive a subsistence allowance and you have not used it by the end of the next month, the last day of the next month, so you haven't used it and you haven't paid it back to your employer saying, sorry, I haven't used it, then it is not treated as a subsistence allowance, but it will be treated as if you received it for services rendered. And if you receive an amount for services rendered, that's that paragraph C over there, the gross income definition. It means it's remuneration. So subsistence allowance, however, if the employee does not use Alright, so however, if the employee does not use the subsistence allowance by the end of the next month, it is not a subsistence allowance, but it is remuneration. Okay, so that's just if you want to write it over there. We continue. Okay, CA. 80% of the amount of any allowance or advance in respect of transport expenses to refer to in section 81B, other than any such allowance contemplated in section 81B111, which is based on the actual distance travelled by the recipient, and which is calculated rate per kilometre, which does not exceed the appropriate rate. Okay, so up to there. Let's just quickly say what this means. This one talks about travel allowance, right? Not company car, remember travel allowance if you receive money. But it excludes this other than, means it excludes a reimbursive travel allowance, i.e. paid by kilometer. Okay, so just up to there. This travel allowance that's included in here is the travel allowance that your employer gives you every month. They say you are entitled to 2,000 rands per month as a travel allowance. The reimbursement one is the one where you do not get a travel allowance every month. You only get it if you travel for business purposes. So that's when you put in a travel claim. So you drive 100 kilometers to go to a client, and your employer pays you 100 rands times 5 rands, or whatever the case might be. So this section over here includes only a travel allowance. I'm going to say a travel allowance per month. It's not necessarily per month. I mean, they could pay you per year also. I'm just trying to distinguish it from the travel allowance paid per kilometer. So just the travel allowance. Now, they say 80% of the amount. Now, what does that mean? Let's say your travel allowance is 5,000 rands per month. And let's say 30,000 rands per month salary. Okay, if we now calculate remuneration for salary, and I'm just doing it for 1 month, it'll be 30,000 rands. When you now do your travel allowance, now you'll recall when you studied travel allowances, there are those fixed costs and maintenance costs and fuel costs, all those things from the deemed cost table. and there's the actual cost. So basically what it is you perform this calculation where you say the amount received, and then you say less business cost, business travel cost, which is basically a cost per kilometer times the business kilometers. Right. You remember doing that calculation. That's the normal one that we do. That's just what we do, and we include the taxable amount in our income. You do not do that for employees' tax. Why not? Because who does the calculation of employees' tax? It's your employer. So for remuneration, that's where we're going to use it mostly. It's the calculation your employer performs. Now, what's the problem there? This business travel cost is a cost per kilometer times the business kilometers. Your employer can't take responsibility for calculating the cost per kilometer and the business kilometers for every single employee. Because then, if an employee lies to them about their travel book, they have to then give it to SARS and then take responsibility. It doesn't work like that. So what they've done is they say, okay, we can't have that. So what we're going to do is, instead of performing this calculation will be performed by the taxpayer when they submit their tax returns. What we will do is we will only tax them per month on 80% of the travel allowance. That's why it's only 80%. So they assume that 20% of it is going to be for travel, for business purposes. So if you come at the end of the year and you now perform your own calculation over here, and you did a lot more business travel, you'll probably get a tax refund. If you did not do enough business travel, then you might have to pay tax in, because at the end of the year when you do your own tax calculation, right? Let's say you don't keep a logbook, and this is what people sometimes make the mistake with travel allowances. They get a travel allowance even when they don't travel for business. Let's say you don't keep a logbook. What are they going to include per month for the travel allowance, the full amount, when you do your own calculation, right? Because remember, we're looking at employees' tax, prepaid taxes. This is performed by your employer. Everything else that you've done so far is what you would do at the end of the year or after the end of the year when you do your tax return. So this is what you would do, what we do, all of us do when we do our tax returns, assuming there was no logbook. Right, so can you see what's your taxable income there? 35,000. What's your taxable income here from the employer side? 34,000. So if you receive a travel allowance each month, but you do not travel for business, you are going to pay in tax at the end of the year. Okay, so that's why if you don't travel for business and there's an option to get a travel allowance, just say no. Rather pay the tax throughout the year than having to pay in. Well, that's my opinion at least. It sucks to pay in for tax. Okay, so 80% of the travel allowance. Then here's a special rule, provided that if the employer is satisfied that at least 80% of the use of the motor vehicle will be for business purposes, then only 20% of the allowance must be included. So, if there is some way that you can prove to the employer that you are going to travel 80% of the time for business, so let's say you travel 100,000 kilometers for the year, it means 80,000 kilometers of that is business, right, or more. If you can prove that, then instead of using 80% over there, you will use, or your employer will use 20%. So you pay less tax per month. Now obviously again, if that is wrong, and you at the end of the year made mistakes and you shouldn't have had it, can you see you're going to pay in quite a bit. 35,000 versus 31,000. Okay, taxable income. Right, that's it. Then CB. This is the company car fringe benefit. Remember, they told us that fringe benefits are included. That's at paragraph I, but excluding company cars. This is why, because here's the company car. It says 80% of the amount of the taxable benefit in terms of paragraph 7 of the 7th schedule. Right. So this is, you also don't take into account the deductions against it. So let's say there's a company car with a value that you receive of 100,000 per month, and there's no maintenance plan, it'll be 100,000 times 3.5% times 80%. That's the amount that gets included for employees' tax purposes. Remember, now when we calculate this, usually there's all sorts of deductions for costs incurred and so forth. You don't do any of that, just 80%. Only if the employee pays for it can that be deducted. And then the same rule applies, provided that if at least 80% of the use will be for business, then 20% of the amount must be included. So if you can prove that it's going to be for business, then instead of using 80% there, you will use 20%. And then C, 100% of so much of the amount paid or granted as an allowance or an advance referred to in section 8.1b3 as exceeds the amount determined by applying the rate per kilometer for the simplified method. Now remember here at the top we said travel allowance. It's the travel allowance that you receive, but it excludes the reimbursement one. Here is the reimbursement travel allowance. Right, now, how does that work? Let's say you travel 1,000 kilometers and your employer says, we will pay you, reimburse you 5 rands per kilometer. You'll remember that there's a simplified method available, right? Which says that there's a certain amount, okay, whatever is left, that amount is taxed. Now this simplified method, please also make sure that you refer to your rates and regulations section there for the rate or whichever rate they provide in the exam. Right guys, and then section 8C will also be included. But it does not include any amount paid or payable in respect of services rendered to a person, who, in the course of a trade carried on by him independently of the person by whom such amount is paid or payable. Now, this is, for example, what they're saying here, is if you are paying an amount to someone and they are working independently of you, it's not remuneration to them. What does this mean? Let's say, for example, you phone a plumber to come and fix something at your home. That amount that you pay the plumber works for him or herself. That amount that the plumber receives is not remuneration. Okay, you are not the employer, the plumber is not your employee. Then they say, provided, this is actually called what they also call an independent contractor. Provided that for the purpose of this paragraph, a person shall not be deemed to carry on a trade independently. As aforesaid, if the services are required to be performed mainly at the premises of the person by whom such amount is paid or payable, or if the person to whom such services were or are to be rendered, and the person who rendered or will render the services is subject to the control or supervision of any other person, as to the manner in which his or her duties are performed or to be performed, or as to these hours of work. Okay, so what they're trying to say there is if the person has to come and work mainly at your premises and you control or supervise them and you tell them how many hours they should work, then it might not be an independent contractor. Then it's an employee and then it is remuneration. Now, I'm going to keep using my example of a plumber. If you call a plumber out to come to your home, then they come and work at your premises, you control them, and maybe you tell them when to come to your home. So does that mean that they're not independent contractors? No. You're only looking at, you need to look at basically what the person earns, from whom they earn it. So if you are the plumber's only client, and the plumber has to come to your house every single day to come and work there, then it won't be an independent contractor. But if you are one client of thousands, and even then when you control it, the person when he's at him or her at your home, the plumber, they are not going to be, will be considered independent contractors. So let me say it again. The independent contractor has thousands of clients. If they come to your house and you control them there, you only control them for a couple of minutes or an hour a day. So overall, they don't work for you. Okay, but if you are a, let's say for example, a construction company, and you use a plumbing company which is independent of you to come and work and do work for you all the time, they will not be considered independent of you. So if they work every single day on your new building sites, I'm a construction company, I'm building a block of flats and all over the country, and I use a plumber every single day. He comes just to us, but he doesn't work for me as an employee. I pay him, he says, I charge you 500 rands per bathroom, let's say. Right? But he works every day. Then that person won't be considered an independent contractor. Right. Any pension is also considered a remuneration, not considered remuneration if it has to do with aged persons or the Blind Persons Act or disability. Right, so guys, your normal pension that you receive from retirement, that is remuneration, not disability pensions and so forth. Right, and also not annuities under divorce. So for example, maintenance. Right, so the rest of this is just, again, a summary of everything that we've seen here. So what is an employer? An employer is a person who pays remuneration. And what is an employee? An employee means any person who receives remuneration. It also includes personal service providers, labor brokers. Right, that is it then for remuneration.